out of the way, or maybe not. I'm sure we will discuss. Uh, cor I don't know if you noticed, but average correlations are so low that it's becoming hard to ignore that. Today we had a dip. S&P futures closed their expiration gap. We still have some levels and targets to the downside, but we will see if this move holds. So yeah, let's start. Ted, a lot of news, a lot of headlines, and of course Fed. So what is happening, and what is your current positioning, and what are your views on the market?
Yeah, thanks. So, boy, the data is just all over the place. So, from a macro perspective, there's just a lot of back and forth, and I think we are starting to get some interesting movement in some of the core macro assets, such as commodities, oil in particular, CL starting to move, and also we've got that big move in the dollar again today. So, let's dig in into some of this. My presentation. Great graphic, Raphael, by the way. This is you late at night, I think. Let's see. Um, as usual, we'll touch on the macro regime, policy, signals, and then positions and trades. Remain in Goldilocks. No change there. Growth up, inflation up. This is market pricing. So today, this morning, we got and really a driver of some of the moves initially in bond market and also the stock market. We saw everything kind of sell off. But we got a big revision in Q2 GDP up from 3.3% to 3.8%. And that 3.3% had been updated from 3.0%. So we got a big move up after a negative print in Q1 of 2025 in the US. So this is a big number. And I updated my Atlanta Fed real-time GDP to reflect this number. This is Q4, this is Q1, Q2, and then here's where we're pricing right now. GDP now is pricing around 3.3%. So that's the forward from there. We had a strong retail sales report last week, up 5% year over year. Factor out inflation because this is a nominal number. Basically, you're talking plus 2.0 to 2.2% in terms of real retail sales. So still reasonably strong. And then yesterday we had, home sales in the U.S. have been off largely because of financing costs and the cost of construction. Average median home price is up around 450,000 US. And so sales, particularly new home sales, have been in the toilet. And yesterday we got this huge print, which was up 22% month over month from July. Whether that continues or not is another question. From an inflation point of view, since we last met, we had the August CPI number. CPI came in at plus 2.9% headline, and then core was up 3.1%, unchanged. New York Fed consumer expectations remain at 3.2%. Five-year forward priced up just a little bit since we last met to 2.34%, but still reasonably well anchored in this low 2.5% range. Trueflation came down 2.0%. And we're looking at tomorrow should be, these numbers are pretty reasonably estimated at this point once some of the other numbers are out, but core PCE and PCE will be out tomorrow. This is the July number. It was at 2.6% headline and 2.9% core in July. So we have the August prints tomorrow. And as you all know, the Fed relies on the PCE numbers for their inflation input. So the Cleveland Fed basically has us going on a year-over-year basis to 2.8% headline to 3% core. And you can see the monthly change at plus 0.3.2 and plus 2.8%. So, inflation's ticking up. It has been since the Fed meeting, and we'll talk about this a little bit more, really written off to tariffs largely. So not a big deal. Meanwhile, in the background, since the one big beautiful bill has been passed, the Treasury's been refilling their Treasury general account. That's been sucking liquidity out of the market. It got down to around $300 billion. So they've added, they're up around 756, probably heading to 800 their target's around $830 billion to have in the Treasury's general checking account. And so that's that liquidity drain, once they fill, which should be by the end of this month, will be probably a net positive for the market. And meanwhile, the Fed's balance sheet has declined to 6.6 trillion. That has been a liquidity drain over time, but is really stabilizing. It's kind of just ticking lower. It's been argued that it really can't go much lower than this, so we shall see. But these have been some liquidity drains, even though we've had some really bullish action in a lot of macro assets. We touched on this last time. We got payroll data was plus 22K month over month with a big minor minus 911,000 revision. So the Fed had this data coming into the meetings. And today we got continuing claims, and that had been ticking up, but now it seems to be abating. So the Fed's been concerned about growth. They've been concerned about inflation, but moreover, they've been concerned about this recent jobless trend. So we're getting some strong signals that the economy might be okay, which has some implications for Fed policy. So speaking of the Fed, we had Powell come out and speak. This is summarized. He spoke obviously at the FOMC meeting, but he also spoke earlier this week in Rhode Island at an economic conference. And summarizing what he said was that the Fed sees growth for the first half of the year at 1.5%. That obviously ticked higher since we got this revised 3.8% for the second quarter. But let's call it 1.75%. Employment growth, payroll growth was down, as we just pointed to, with U3, which is the unemployment rate, up to 4.3%. Not bad by European standards, but they're concerned here in the U.S. about that rate starting to tick up higher. He also pointed to PCE inflation at 2.7%, with core at 2.9. Again, we're expecting that to go up to 2.8 and 3.0 tomorrow. And basically had a long dissertation around how this was primarily driven by tariffs, and they thought that they would be able to digest that over a period of time. That said, they basically in a box because they've got inflation up, they've got employment kind of ticking lower, and basically said there's no risk-free path at this point in time, but they're more concerned about employment. And given the shifting balance of risk, that warranted a 25 basis point cut. Of course, the newest member of the FOMC, Stephen Myron, who joined just in time for the meeting on Tuesday and Wednesday, was appointed basically as this typo, but shadow chair for the Fed. And so this guy, he came out earlier this week with a big speech, and I'll summarize what he said. He basically said that growth is slowing due to structural forces, primarily immigration and trade policies, tariffs, that's lowering GDP potential. As a result, he believes that monetary policy is restrictive, and that risks upside to unemployment, which he has agreement on the FOMC around that to some extent. So they are all concerned about the relative level of restrictiveness. However, he thinks that inflation is going to start ticking down, that rent disinflation should reduce PCE headline by 0.3 to 0.4% in the coming months. So he believes inflation will start trending down, a disinflationary trend. The neutral rate, he believes, is much lower as a result, and that monetary policy, Fed funds, should be at 2.0 to 2.5 as a neutral rate. And so he's really kind of taken the bull by the horn, started to really force a dialogue around these numbers. So we'll see how this transpires as time ticks on. So before this morning's GDP revision, I pulled this chart, which is the Fed rate, Fed futures, CME FedWatch tool. There was a 92% probability of a 25 basis point cut on the meeting on October 29th, followed by another 25 basis points into year end. After that print came out this morning, there's some concern in the market that perhaps we might not get that cut. So we had Fed funds probability decline to 85.5%, still in the realm of being cut, but given the growth from the second half and given what we're seeing for growth and where we are with inflation, who knows? So we'll be watching this number as we get this PCE print tomorrow. From a market signaling point of view, last time we talked, we basically asked the question, what happens when the Fed cuts, pauses, then resumes cutting at all-time highs? Base case for me still is that we get some additional cuts, markets pricing 75 basis points. The 3-month return in September of 1998 was plus 18.4%. So we'll see if we get that. We'll see if we get a move like that into year end. Meanwhile, from a signaling point of view, are we going to repeat what happened last year when the Fed cut and we had big upticks in the dollar, big upticks in yields, or not? But we've got over the past week or so a big uptick in the dollar. And in my work, it is now inflecting to bullish. I think it went bullish for me today, which is basically, I think it's a 1% positive over its 55-day trading days. Gold is also up, continues to go up. Silver ripped again today. Yields relatively flat. And today we had what could have been a concern about duration given the print in the GDP, yet TLT ended flat. So yields are flat with the curve also flattening. My steepener trade has been blown out entirely. So that's not working. And at the same time, we've got the MOVE index, the volatility index for bonds, plumbing fresh lows since 2022. We're printing in the 70s most recently. So, low bond vol, low equity vol. I mean, yeah, we printed 16 today, but, equities have not really, equity vol hasn't really done much. We're off a couple percent or so off the all-time highs in US equities, so still signaling strong. In Europe, we've got the DAX struggling. That's bearish trend in my book. But both the that should be SEC, both the Shanghai Composite as well as Nikkei continue to go higher, near all-time highs. So certainly bullish for global equities. And then we're going to take a look at commodities, which are starting to move. And Bitcoin, which has been up and down and all around, really broke bad today. So we'll see if it just bounces again like it did the last few times or not. But that's sort of the backdrop that I've got as we move into looking at some positioning and trades. Starting with the dollar, this is a weekly chart. As you all know, if you've watched the show, I've been long since the week, I guess it was July 11th. I got long on a weekly buy signal. This is a weekly chart. You can see the dollar has been kind of bouncing around this line in the sand, up and down, all around, trading, from 2 standard deviations every week, seems as though, and closed up higher today, plus 61 basis points. I have been long with UUP. And bought back here on the 11th, added on the 14th of July, added some more on the 6th of August, took a little bit off on a weekly signal on the 15th, and bought the day before the Fed. The very next day, Raphael came out with a buy signal, and it has, I used the opportunity to take some off last week, and I took some off again this morning. So this has been an interesting move, one that we need to pay attention to. From an FX point of view, part of the way that I hedged my long dollar position, because it was a bear to neutral trend, is I was long FXY. That is now getting blown out. In fact, my stop got hit today. Took off a quarter of that position. I've also been got long FXF, which is the Swissy, the middle of early September. Still positive in the position, but definitely a negative move today with the dollar strength. So we're watching that. We've got to stop in place, and we'll stop out if we need to. Equities, that got a strong buy signal back on April 11th. Have been long ever since. SPY added big back here. My chart's going off the table. I've got 4 months of charts, so most of my buying was done back here. We did some selling into some strength. Got stopped on August 1st. August 1st was a day that caused was a big copper move, if you remember. But the SPX got crushed on that day. I actually took a quarter of my position off on that stop, but then was able to, it quickly rebounded, and I was able to add position here on the second, and then it been sold a little bit into strength on September 6th and still holding the position. Got very close to where I want to buy. I actually had a limit order in today at 648, 654, sorry. I had a limit order in at SPY 654 today, did not get filled. IWM, however, similar situation. Tracks the SPX buys and sells pretty closely. Did get filled today at 238.40. Closed a little bit higher at 239.29. So that was a good pullback, a one standard deviation move, one where we're still in a strong bull trend. I'm not convinced that we're my base case still is that we go higher. Stops are in place. Risk management will take over if this does not work out. EEM is similar. I did have an opportunity to do some selling. We talked about last time on the 10th of September, and also sold some on the 17th of September. And that's been flat ever since. Have not added. Would add if we got a considerable pullback. And it's interesting that EEM only down 60 basis points, with the dollar up 60 basis points. So really. EEM's priced in the U.S., so it's really really sensitive to the move in the dollar. So I actually regard that as fairly positive action in that regard. My chart hasn't updated for crude yet, but we did get a higher print again today. It has been bouncing around the bottom here on the weekly chart. I am noting that when my buy signal for on a weekly basis comes when we get this sort of move from deeply oversold into above the 80 level. If this prints higher above that level, that would be a buy, an additional buy for me. I am long, as you guys know. As you know, via PDBC. Stopped out back in August, got long again here in let's see, where did I get stopped out? I got stopped out on August 6th, got back in as we inflected bullish on the 25th, been holding the position. Sold a little bit here, but still have a decent sized position. Haven't added at the top of the range right now. Probably makes sense to take some off, but if this thing gets some momentum, we could really charge higher at this point. DBA, touched on that last time. This is agricultural products. Got a sell signal last week, took some off. And then tried to buy some, I tried to buy some on the 18th and 19th, stopped out. I am out of this position. I really traded it well early on. Got cute here, was able to take some off near the top. I made a small amount of money, but not what I think I should have. And so it's been disappointing from that perspective. DBB we haven't touched on, but this is a metals commodities. I've been long since the 30th of June, small position, built it, sold some, stopped. This was that big move in copper that really destroyed the copper chart. So when you look at that and you're trying to compare, where things are, I mean, copper just got hammered on tariffs back in, what day was that? That was August 1st, right? Or the 30th of July. And so was able to sell some into this strength, and then bought some back on the 22nd and 23rd. So I have a full-size position, and it has started to move again for me. So I'm bullish on DBB and metals. Gold, do we need to say more? Gold has just been a ripper. I have been selling into this strength, holding a smallish position now. Actually gifted a quarter of my shares to my favorite charity yesterday. So I've got a diminished position in gold in my primary portfolio. I do have a large position in gold and several others. TLT. So TLT gave us a signal back in May. Have been long, small ever since, and got a sell signal last week. But it's really not selling off that much. In fact, today, really kind of held its own, even though we're looking at potential acceleration and growth. So I did not add to this position because I've got as full a position as I want on duration at this point in time. and so I did not add, but it certainly would have been a good spot to add. That said, I did add today to HYG. So HYG is high yield, and I think I added at 80, right around here, 80.93, closed at 80.92. So it's a good spot for me. One standard deviation from the recent high is where I'm at. Earlier this week, I did add to my IEF position after a nice pullback. This is the 10-year bond. I have a sizable position here. It has failed at this point in time. It's, if my stop is not hit, I will probably add to this position if we get some positive price action. It's interesting that the 10 year is trading so much differently than the 20 year. And it may just be that there's a limited amount of duration in the market at this point in time relative to a note yield in the 10 year. Eyeball out. This is my steepener trade. Got out here. And this is a position that I've actually had on most of the year and been able to add and trade around. And now I am completely out of eyeball. Geez, that was a big volume move today too. So kind of a dumping. And this, again, steepener is just not working. Bitcoin, almost done, guys. Bitcoin, I trade it with FBTC. It's been snapping around, really kind of broke bad. This is a 100-day moving average, broke bad today on volume. I don't know, I've not been able to trade this particularly well, so I'm not trading it. So I'm just noting that it's not responding to the rest of what the rest of the market is doing or risk assets are doing. One thing I am long, however, and has been working this week, and I think it's interesting from the point of view of what's happening in commodity space. Got long with on the 17th of July with XLE. Again, this is a weekly buy, small position, added to the position, took a little off here. When my stop was hit, it immediately reversed. That's a positive sign. And I added here on the 19th and added more again on Monday. And then I got an immediate pop on that, so I took a little bit off. And again, it kind of broke and continued to go trade higher today. So, something to keep an eye on. This is really, if you take a step way back and look at where XLE is on a long-term basis, we're kind of trading. We're at that, we've got not a lot of headroom, at least in terms of where it's gone to before, which is around 94. We're trading at 91 now. So anyhow, that's what's on my screen, and that's what's going through my head.
Thank you, Dad. Very insightful as always. So, Raphael, is this the top or no?
I guess we will know very soon. So I agree with so many things that said, especially regarding commodities. I'm gonna go through oil a bit later. So I was quite active these past 2 weeks, actually, traded quite a lot. So I'm out of ES as the target was reached. I bought puts on Thursday, got stopped on Friday, bought back puts on Tuesday. Still holding half the position. I'm still holding Tesla. I'm holding NVIDIA. Tried to buy deep Amazon, got stopped. Initiated a long oil. Tried to deep buy Bitcoin and Ethereum, but stopped. And still short the EURUSD thanks to VI. So I'm going to go through every position. Let's go first with ES. Okay, let me set up the screen. Okay, so 2 weeks ago, so on the day of the show, I was selling a third of my long position at 6588 and was targeting the first target provided by VI at 6660. I actually got out totally of my position right as it was going for that level at 66.50. I didn't like what I was seeing in the VIX. Didn't want to roll the contract. I'm gonna go through the VIX later on, but I pretty much expect you guys know what I'm gonna talk about. So what I did was, sorry, there's something from Zoom. Okay, here. So what I did was, as I was exiting my position, I was actually buying puts on SPY. So got stopped. Sorry, it was on Monday. Got stopped on Monday and re-entered here on Tuesday. So far, looks like a great trade. I took out half of the position today as we retested the last contract expiration. And now the question is, what's gonna happen? So from talking with Vi, checking the price action, my thinking about VIX, I think this sell-off should continue. I'm not expecting this dip to be bought. I think it's gonna last probably a couple of weeks before we can safely come back. So of course, we're gonna trade what's in front of us, not the bias. But my bias for now is that I'm not expecting a buyable dip before probably the end of the first week, maybe beginning of the second week of October. So that's my bias right now. I'm not buying this dip currently. I will hold the puts remaining and move the stop as the price goes down, or will get stopped if the price goes up. So I'm going to tell you more when we get to VIX, but this is my current thinking regarding SPY. Especially, you can see that, for example, on the SPY, yeah. So we reached the target, and as we are reaching the target, I don't know if I can activate that. Give me a sec. Yeah. I was getting some sell signals, and it was the same on QQQ. Lots of sell, get to target. You had also, I think Japan was the same. I mean, I was getting hammered with sells, and you have to consider that we reached significant levels. We have expiration. I didn't understand why people were so bulled up as we were entering this week. So for now, I'm still waiting. Now let's go to Europe. So again, I agree totally with Ted. Germany looks like crap. So here you can see in blue, this is the volatility of the DAX. And you will notice something very simple. The volatility in blue here is doing higher highs, higher lows. It's going higher. Trade is going higher. This is definitely a bearish setup. So not touching. This is one I'm going to look to buy if I'm buying the European market, but it's pretty simple. When you have volatility increasing, trader volatility increasing, you just don't buy this asset. One troubling one, at least surprising one for me, is the Nikkei, considering what we are seeing in the US market. The correlation between the Nikkei and the tech sector in the US is usually quite high. But as we are getting sell-off in tech, in broad American market, the Nikkei is not reacting. I had some sell signals in this area. I don't know why they're not showing. Sorry, I had to press this. Yeah. As it was reaching actually also the target provided by Vi, but so far it's holding well. So a caveat to my thinking about the sell-off continuing would be, okay, let's see what happens by the end of the week and next week in the Nikkei. If while Matrix is starting its cycle down, I'm not seeing propagation of the sell-off in the Nikkei. Basically, Nikkei is just holding here as it usually does when in the bull market. Maybe I would reconsider my point of view regarding the US market. I don't know if it makes sense, but I'm going to be monitoring the Nikkei end of week, so tomorrow, and next week. If I'm not seeing a sell-off in Nikkei, then maybe I would close my puts early and consider buying back ES. Now regarding DXY. So again, agreeing wholeheartedly with Ted. So if you were monitoring the volatility of DXY, you were saying that it was doing lower highs, lower lows, indicating the fact that its volatility was transitioning. We still don't have the cross of volatility trade and volatility trend, which would give us a very nice push for DXY. But if you are monitoring volatility, you can see it's doing what you want to see when you have a transition to bullish trend. So in the past few months, anytime DXY tried to break MFR trend, it failed. In my opinion, this time it's gonna work. So monitor this one. If you're holding UUP longs, or if you bought calls on UUP, doesn't matter the way you expressed your view long dollar, you may get a chance to finally see this one rip. Now for EURUSD. So this trade was actually pointed out to me by Vi. You had what Vi calls a matchup. So first of all, EURUSD was hitting the monthly target. I think it hit like almost perfectly. Second of all, so you have been provided now with the levels from futures. And I guess Vi will talk about it with 6E, but the level here on 6E, so it was 1.19795 was one of the first target to the upside for 6E. So you had a matchup. So basically, you had the monthly target plus the target provided by Vi call it matrix. It's not my matrix, something else, matched. Another thing that happened on that day was that I had a buy in DXY, I had a sell on EURUSD. So I took that short. I took 2/3 of the position out as we reach the monthly pivot. Final target would be the target to the downside around 1.15, and my stop is right above here around 1.182. Okay, so if you were taking this position too, I hope you took some out here, but your ultimate target should be at least the first target to the downside. And I think this one should print well if my if my opinion is correct regarding the change in volatility for the dollar. Now VIX. So the guys who have been following me for some time know that, so you know there are 3 phases. I'm not going to talk about it again, but we are in the last phase. Finally, in the last show, we were entering it, and trade of volatility and trend of volatility have crossed. When this happens, the market gets more volatile. It can either express itself by having choppy downside action, or some really volatile days. So this is when you get moves from 17 to 2021. This is also the period of time when you get the crazy ramp to 40, 50, 60. So I don't think the second scenario is the one that people should expect. In my opinion, what we are gonna get is probably some short-term spike to 20, then back to 17, another short-term spike to 20, back to 17. This would be my expectation. So I hope you saw that they crossed and that you saw that we reached the monthly targets provided by Vi, that you combine every information that you can get from us and that you bought puts when you saw that. If not, I think you will have more opportunities as we are now in the phase 3. So, I mean, it confirms, in my opinion, the fact that you should not look for a dip for now. At least wait for, like I said, I would say like end of the first, beginning of the second week of October. I think we would get a clearer understanding of if we should expect the first kind of move in the VIX or the second kind of move in the VIX. So crazy ass rally. Now let's go to CL. So I tweeted, I think a week and a half ago, something like that, that I was expecting oil to break to bullish trend soon. The reason why I tweeted that was that if you monitor volatility of oil, you can see that it's doing exactly what I pointed out for DXY. It's making lower highs, lower lows. We have trade above trend. We have price above those two. You have matrix rolling. So you had the setup. Now, when was the time to take a position? Again, you had a matchup on CL. One was the contract expiration from last month at 63.21, and you had the monthly pivot at 63.6. So I took the long at 63.6. Now what I want to see is a confirmation of the switch in volatility. So my expectation would be that this thing is gonna rip. Another confirmation that in my opinion, I got was the fact that Brent aligned with that signal that I got from CL. So you can see here, this is the Brent. I pointed that out several months ago when I said I was watching for a long in oil. I wanted Brent to align with CL, and they are doing same. Volatility is doing lower high, lower lows. Volatility is pointing down. Trade and trend about to cross. In my opinion, this is a good setup. Okay, now let's see where I was wrong, because it's nice to be right, but it's also nice to be wrong. So for gold, my expectation 2 weeks ago was that we should get a sell-off in gold to get another add opportunity. This sell-off didn't happen. We got some kind of small sell-off here, but immediately it was bought back and it went back up. So this one, nice if you are still in it. The cap to the upside is gone, but yeah, so the cap to the upside is gone. Basically, the upside just increased more. So another thing that you should note is that we reached the daily mean target. So you know those values. This is when you should expect some kind of sell-off. When trade reaches historical mean, we crossed daily mean 1, got small sell-off, and nothing happened. So your next target to maybe take some off or consider unloading the position would be daily min 2. So my expectation would be we would see gold keep running until we reach daily min 2. Okay, now let's go to Bitcoin where I was wrong. So I took a long at 112K. It was a risky trade. It was a deep buy trade. Put a stop at 111K. Didn't work. So now what to look? Volatility is clearly pointing up. So that's not good, right? That's not what you see in the bullish asset. Anyway, MFR was confirming that MFR trend was confirming that we were not bullish. Expectation would be to actually look for the retest of monthly pivot at 108,000. So expectation would be to look what happens there. For now, got stopped. I'm waiting to see what happens there. Another wrong attempt that I did was trying to long Ethereum. So basically, it was the same idea as for Bitcoin. I was expecting a dip. Stop was right below, got stopped. So so far it was a wrong bias, wrong trade. Let's see what happens when we get to some macro levels provided by Vi. So that's for crypto. Sorry. Let's go to yields. Okay, so the big question for yields is, are they trying to get back inside the box? So you know the box drew those months ago, and the idea was when they break their respective boxes, we should see some continuation on a trend change. So they are trying to get inside the box. Okay, will they succeed? Will they fail? I don't know. But yields are still bearish trend on MFR. So my expectation would be actually that the test of trend will fail and continuation to the downside in yields continues. So when Ted was mentioning that he was considering to add to his long bonds position, I would agree with him. So I would not be surprised to see a continuation to the downside on yields, so to the upside on bonds. So that's my view currently. I don't think this thing is gonna get inside the box. I think it's gonna get rejected. Now let's go to okay, so stocks. So let's go to the ones I'm holding. So NVDA. NVDA was pretty easy one to enter. You had what Vi calls cheap trade. Cheap trade means you are taking a position with very limited downside. So the entry was the monthly pivot. We got some one-off retest of this monthly pivot. I don't even remember why it happened. Maybe some news, something. Maybe, I don't know. But we got that retest. So if you are monitoring it, it was very, very cheap to get in. And what you got was retest. I think it went to all-time high on this one. So of course, on this one, you get a retest of top of the range. You take some off. And now, even though the market is going down, it doesn't matter. You have a very good entry, very cheap trade. So I'm holding this one. Stop is right at the pivot. Not a worry in the world. Another one that I'm still holding is Tesla. So I took half at 370 and took some off at 410, which is the monthly target. Now I'm getting some sell signals, again, coinciding with the fact that we went to the monthly target. Another thing that has been materializing for some time now is the cap. So Tesla has a cap. I'm pretty sure you guys noticed. My expectation is still retest of this area somewhere here between 400 and 370. For now, it's not happening, but if the sell-off continues, best bet would be a retest there, which I'm gonna buy. Be sure I'm gonna buy. I think this thing is gonna keep ripping into next year. So I'm looking to add aggressively to this one. Finally, the last one I tried was Amazon. So I saw the break of the monthly pivot, so reclaim, and yeah, I was buying in this area around 200 to actually 222.5. I actually added more as we were going down, retesting the low of the range, held the next day, but got stopped today at the break of 219. So unfortunately, this one was a failed attempt. But again, cheap trade, control the risk, and when I took the position, the upside was quite interesting. So, but yeah, volatility is increasing. This guy now it's a no-go for me. So yeah, I think I covered pretty much everything. I hope it was useful for you guys.
Thanks, Raphael. Very useful. Okay, I will share my screen. I will start from euro dollar. This time, because Raphael actually did a very great job explaining, but I wanted also to mention that, yeah, we had a level in 60 futures at 1962. It was derived from our expiration prices, and I mentioned this level at least 2 times in previous market talks. And also, I wanted to mention that I highly recommend you watch the third trading plan video that was released on Sunday, because we have new expirations and new most important pivots and targets. So all these numbers that I will be talking today, you can find them in that video also. But yeah, so euro dollar during the Fed was a great setup. So I reversed short. Not at the actual high, of course, but when it came back below 1962, I reversed short, and I sent a message to Raphael, hey, you see that? So I'm glad that he took this trade, and the actual high of 60 futures was 1979. Of course, it only spent couple of seconds there, and now we have quite a nice move to the downside. But what I wanted to note is that euro dollar, the actual low today in 60 futures was 1.16985. 1.16985 is exactly our monthly pivot to the tick. So now we are at this very important spot for tomorrow. If we continue this move down, we will get targets way lower, and it will be a very nice ride to hold long dollars or short euros or whatever proxy you are using. But actually today was the time to maybe reduce your positions if you are short the euro, just because of that. So I really want to stress this thing out, that it's important to monitor those. But yeah, we are below quarterly pivot. We are basically at the monthly pivot. We are again below our monthly upside target, and yeah, so now if this move continues, we will know exactly where we want to target, and we will want to target levels all the way to maybe 1611, maybe 1540, maybe our downside target of 1530, which is a very strong matchup with another expiration target of 15.154. So it's all about confluence, like Raphael mentioned that the more matchups you can find, the stronger the signal. And when following this process, you will notice that matchups happen very often because you can do math in multiple different ways, but you will arrive at basically the same numbers. So if you see that, it should give you way more confidence on which levels are more important and which are not. But yeah, September contract expired at 1753, so this is our new quarterly pivot for 6E, and yeah, no surprise, we are below, and today we settled way lower than that. So yeah, I wanted to start from euro dollar because I really think it's one of the most interesting setups we have now, and actually the timing of the show is very good today, just because we had the exact low at the monthly pivot. So it's all about tomorrow. It's all about tomorrow for us to know whether we want to stay short or not. Okay, so now we will move to the usual stuff, and as I mentioned in the beginning of the show, actually we we have very low average sector correlations to SPY, and when I say very low this time, I really mean it. So we will start from short time frame, which is for me 10 days, and we have average sector correlation to SPY of 0.13. So for those who are monitoring it, and yeah, you will know that it's almost as low as it can actually go. Of course, we had some values lower in 2024, but and in the beginning of 2025, but still keep that in mind. What it tells you is usually that this move now, the dispersion is huge, and this move is led only by a couple of things in this market. And I'm sure now, if you are monitoring what's going on in the markets, you know which things they are, but basically not all sectors and not all stocks are looking positive and looking very bullish. So you need to keep that in mind. And of course, at these low levels, it's harder to expect for this thing to continue way longer. These correlations will reverse at some point, and this can actually lead to a correction. Now, my overall views, I will agree with Raphael on most of the things that was said. I just don't expect the correction to be maybe like Raphael said, for weeks or until the mid-October or so. But yeah, I still have a couple of important levels, especially in the S&P 500, that I think market will try to fill and to reach. So I'm not today. I'm not very particularly strongly bullish, but I still think that we are in a melt-up phase, and this phase will continue. And now the only question is, if we get a dip, how deep it will be. Of course, that's the most important question everyone is asking. So we will see about that. But other than that, let's move to correlations. And I hope you noticed that stock bond correlations, if we go to SPY TLT, are going down on a midterm, which is 21 days. These are positive, but later we will move to the correlation chart. But I think you noticed, if you are monitoring these on a daily basis, which you should, that SPY TLT correlations are actually negative and continuing to go lower. So if we go to a chart, this is a 10-day correlation of SPY and TLT, and you will see that this thing just continues to drop. And of course, as with everything related to correlation, it cannot drop below -1, of course. But yeah, we are already at basically minus 0.5. So after the Fed, what happened with bonds, so ZN, ZB, and for those who are watching ETFs, TLT and others, is of course that we got the move down in bonds, because this move up that happened a couple of weeks before the announcement, and of course everything happened exactly the way it was expected, and now there is no reason for people to bid the bonds way higher. Actually, there are reasons to sell them. I still believe that bonds are in a buy the dip mode, but before the show we had this conversation, and I think that the dip can continue to dip for quite a while now. But yes, I absolutely agree, and I want to mention that we have targets, we have pivots. I will cover them in a couple of minutes, but don't be in a hurry to buy bonds, but definitely don't short them. We are in a buy the dip mode. I just think that the dip we are seeing here is not the actual dip you are looking for to buy. Okay, now I will go to ES. And today we had a very important event, and what happened is that we finally filled our expiration price. And if you watched video on Sunday, or if you are following my tweets, you know that current pivot for us is 66.58.75, because this is where the September contract expired. We managed to close above that level. So also it's all about tomorrow. Basically, we almost retested first quarterly target, and also this was a very healthy and expected move, because ES reached its annual target, and of course went almost all the way to the second monthly, but we needed to go below the annual target just for a while, and then we will see if this move has legs or not. The level that I was talking about, that I still want to see filled, is this 6606 level, which is active continuation gap. I'm sure you are familiar that futures contracts, when it comes to trading them, they usually roll based on volume. So when the volume of back month contract becomes higher than the front month contract, that's when you roll your charts from September to December. So this is called active continuation. And on this day, when we rolled to December, we still have this gap. Market tried to close it, but the low was 66.11 on that particular day, and this gap is still not closed. Market always closes these gaps. Of course, now don't rush to click sell buttons or something, because sometimes these gaps can take years to close, which in this case I don't expect it to take years, but these gaps will be closed, and it's just a question of time. So this is the next level. I saw on Twitter that Ragav had a question about next year's targets to the downside. So the answer to that question will be exactly that. First is 6606, and all the other targets you can find on Sunday's videos. But we will have, if market actually fails to bounce, and this move continues below 6606, then we will get our monthly target, which is 64.79. Let's call it 64.80. One level at a time. Again, today I'm less bullish than a couple of weeks ago, and when quite a lot of market talks in a row because we just had this melt up. But I still think when melt up will continue, we will see new highs, and then of course we have targets to the upside, and we will have new swing targets and everything else. But now what we are looking at is, of course, whether the 66.59 close will hold, and if tomorrow we get a green day, then I will again become as bullish as I was before. Now I'm a bit less, but all it takes is one green day for us, basically. So yeah, 64.80. I know that options guys have some levels at 65.05 and somewhere in that area, but based on my process, there is nothing in between 66.06 and 64.80. These will be the next targets that I'm looking at. Gold. Okay, I will touch on gold because, and I saw in the chat there is a question about gold. Do we think that gold will go much higher? So I don't know regarding much, but I think that gold will definitely go higher. I just don't know what that much means. Some people, already talk about 4,000. Some people, a couple of shows ago, I also showed how to do a logarithmic fib, which can take us to 8,000 and so on. We have plenty of levels and plenty of targets, and this move, I was laughing once when Zero Hedge or something tweeted that, oh, it's the biggest move in gold. No, compared to the move that we had in the 70s, if you are talking about percentage basis, this is not even a significant move at all. So where are the next prices we are looking at for gold? So of course 38 for 38.55 is our second quarterly target. So we still have some time in this quarter, and gold can definitely go and touch this level. So this would be my short-term upside target, because of course for annual targets we need to swing them a couple of times more. And actually I already see, just by looking at numbers, if we do very rough math, without being exact, but if we have annual targets of 30, 43 and 34, 46, and our trading plan video viewers and subs know that these are equidistant, you can guess that the third annual target is somewhere around 38, 49, something like that. So for 38, 49 will also give us a match up with a quarterly target. And usually you don't need to do these equidistant swings for other targets, because like I said, it's a fractal, and you will arrive at some number that you already have from somewhere else. Like in this case, you don't need to calculate the third annual target because it will match with the second quarterly target. And it's not because of some particular formula, but it's because usually these swings are always measured, and they are always orderly and in orderly manner, even though it may not look like it. So yeah, this is my level to watch for gold. But for now, what needs to happen, of course, first we need to take out this high, and also we need to not make new low based on this level. But gold, Ted said that, and I can't argue with that. I mean, there's not much to say. I mean, I would not short gold even with my enemy's money or something. I mean, I would not do that. It's just crazy. So yeah, these are the levels. These are the pivots to the downside. The most, and it would be a nice dip to buy, of course, but I don't expect. But the most I see it falling is maybe 36.20 or something like that. But yeah, it would be a nice dip to buy. Yeah, so don't short gold, don't chase if you don't have it. We are, of course, in a buy the dip, but we all know that it's very hard to get that dip in gold, because I know a lot of people who are waiting for dips, and dips don't happen, or they are smaller than people expect. Now, I of course also want to touch on one thing, which is gold silver ratio, and I'm sure that now everyone is talking about that, but silver is yeah, silver made a higher level compared to Hun Brothers, and if you know that story about the squeeze in silver, or if you don't, I recommend you search on Google or YouTube what have you. Yeah, but basically we are with silver we are on the way to the highs that were made in 2010. Ish. So if you check the silver chart, you will definitely see that. But that's not the topic of what I wanted to touch on. I wanted to touch on gold silver ratio. That basically this thing is on a move down, and we have this annual target for gold silver ratio closer to 817. Yes, correct. 817. So maybe then there can also be a play. But now, of course, both metals are ripping. It's very bullish. Silver looks better than gold, actually, and the targets for silver are way higher compared to targets for gold, because yeah, even though 38.55 is what, it's 80 points, but based on recent months, we all know that 80 points for gold is nothing, absolutely. But for silver, targets are way higher. So keep that in mind, monitor this ratio, and of course, target scripts work on all these ratios as well. So you can check what's going on. I remember when we started these shows years ago, I was talking about ratios way more, basically every single day, every single show. Now I rarely do that, but my most of my quote boards every single day are not individual assets. It's always ratios, because that's how capital flows. That's how you can see where the money is moving and what the market is trying to tell you. And of course, same with the futures markets. I always monitor futures markets, even in the assets that I would never trade as a trader. Things like lumber, for example. If you want to understand what can you expect from economic activity, of course, you watch lumber futures. If you want to check on inflation, food inflation and others, of course, you will watch lean hogs, cattle, of course, grains, and so on. So we all know what happened with cattle futures in the last couple months, and we are already starting to see that in the reports. Futures markets from front run everything, so I highly recommend you watch that. But yeah, gold silver. Today I really wanted to talk about gold silver ratio, and that actually, even though there is not much to say about gold, but definitely, like I said, I would not short it with my enemy's money even. So don't do that, please. Yes, Bitcoin, and I believe it's the last asset that I have limit order in. So yeah, and my limit order is somewhere at 108. With Bitcoin, I wanted to mention that if you are trading cryptos or anything crypto related, you need to look at the data and look at the charts from the same exchange where your liquidity is. Otherwise, your targets and your pivots will slightly differ, because data feeds are different, and prices are slightly different. So, for example, I just trade on Coinbase. I trade futures. But if you do spot, also just open a chart of a spot on the exchange where you actually trading. But yeah, basically, I want to buy Bitcoin here, and my order is still not filled. So we will see if it gets filled, and we will see what happens then. Below here, I will be out, which is a quarterly pivot, and if this if this idea will be wrong, then the next spot look buying is closer at 100,000. But yeah, long story short, I will not be calling a top collapse or some major dips, but I can tell you that if ES is closes below 66.06 tomorrow or next week, then look for 64.80, then 64.02, and then if we go below 64.02, I will update the levels. We will have very important levels below, but these are enough. And if tomorrow we have a green day, so this close above 66.58 will be legit, because remember, any levels that I'm talking about, first of all, we are closing targets. Don't try to make decisions or click buttons just because of intraday wiggles. But yeah, if this close above will give us a green candle tomorrow, we are safe. So there are things to be concerned, things like average correlation, and of course the dip in the markets and this dispersion thing that I showed about. But we are in a melt-up phase, and we will remain in a melt-up phase until proven otherwise. Yeah, that's it from me.
Yeah, Vi, actually, I want to dig into the question that was asked about gold. So if you look at the correlation between gold and the dollar,
Yes.
how much weight do you put in your decision making on the correlation with the dollar? Because we are seeing potentially a shift in strength for the dollar, and the correlation with gold has been I mean, I think it's
Negative.
around 0.9, right? Positive. Sorry,
Negative
negative
59.
0.9.
Negative, of course, yeah.
So, I mean, how much weight do you put in this, considering that all of us, we are expecting gold to go higher?
Yeah, good question, and it makes the process a bit simpler for me, because I look for matchups. So of course, when I look at the correlations, how I use it for trading is, for example, if I see now that UUP to GLD 10-day correlation is negative 0.57, 21-day correlation is of course also negative. If I see a good spot to buy gold, for example, or like in this case, a good spot to reduce my Euro USD short position, I would look at the highly negatively or positively correlated assets for matchups. So, and for now we see the signal that, of course, gold had this very small dip, which is just expected because dollar is on the up move. But we see that dollar is at a very important spot when it comes at least to 60, and gold is not even close to any important targets, and we have our targets to the upside. So how I give, it's important. Correlations is always the same. The first thing that I look every morning, how they shift, how they are changing it, and what they are telling me. But it's not like I would not buy gold just because dollar is signaling something else. I see for matchups, and I think you know when we talk about the markets that I don't take every trade. Usually, I take quite a few trades in only few assets, but I really look for a lot of matchups. And when I talk about matchups, it's not only like we talk about matchups on the same asset that you see the range, the trend, the target, and so on. No, I also look for matchups in other assets. And the best trades are then exactly like you said, when you see something good opportunity to buy gold, and at the same time you see good opportunity to short the dollar, or at least a confirmation from the dollar move. Yeah, the more matchups, the better. But when I'm trading my assets, if I see a good, that's why I always wait for cheap trades. If I want to buy a gold at any level, let's say 36.20, I mentioned 36.20. So if I want to buy gold at 36.20 and I see that gold is dipped to 36.20 and I see that it's reacting, I will not guess. I will buy gold. It's a very cheap trade. I know where my stop is. I'm risking maybe a couple of points or 5 points or whatever. So I will definitely not skip the trade just because I don't like something in the dollar. But how much weight I give in my process? A lot. This gives me the opportunity to choose the trades that I really want to take.
Yeah, and I actually have one last question, right?
Sure.
So you sent me the message on the Euro USD trade, and
Yeah.
it was a good reason for me to take it. And you literally nailed the top of it, and you told me I'm going all in. So can you go through what you saw exactly and why you decided to go like very heavy on this short Euro USD?
Yes, of course. Yeah, so first of all, I think it's important to repeat and mention that I was long and I just pressed the reverse button. So I was not flat before that happened. If you remember, I was long 60 from a couple of shows ago. But yeah, let's go now to 60 and let's debunk everything. So first of all, I never look at spot. I have no idea what. I mean, I can check them in a couple of seconds, but I have no idea where levels for spot are or what the spot is doing because spot doesn't matter. Spot is not running the world, never for any asset. But what happens? So we have this matrix, and maybe I need to change the name because it will confuse some people. But I have these expiration levels. When it comes to hierarchy, and I will give some nuggets today from the video that I made available on Sunday for trading plan subs, but without giving too much away. Basically, when it comes to hierarchy, expiration levels are the most important when we have annual targets, when we have quarterly targets, and when we have monthly targets. And for the previous, from the previous expiration cycle, we had this upside target of 1962, and you can see it on a second row on my chart, which is one of these most important levels to me. And I was long from the pivot of 1611, so I'm sure viewers of the show remember I talked about it many times. So what was 1611? It was just the expiration price for June contract. And the market was going higher. It was a nice trade, but we still needed a push to go to this level. We had plenty of opportunities to scale down. Of course, we had other pivots and monthly target and so on, but still, we needed a push. And guess when that push happened? And that push happened after the FOMC announcement, and that was the evening when I sent you that message that, hey, I'm reversing short. So what happened? If we look at the longer term ranges and regular term ranges, I think I need to enable normal ranges. I just don't want to keep my charts as clean as possible when I am showing stuff, but yeah, let's wait for ranges to low. The main reason was that I reached the goal where I wanted this contract to go. I reached the goal. I would buy again if I see that it's breaking some other levels or so. But basically, that's where I expected this contract to go to the upside, and that was the main reason why I shorted. So we had this exact top of regular term range. Not a lot of upside to give away relatively to the second monthly target. So of course, second monthly target is still higher, but we know the hierarchy that the most important levels are these. They all are important, but the most important levels are these. And now you all of you have this. Just watch that video. I go through all the indices, euro, dollar, Nikkei, Bitcoin, a lot of stuff. And I just hit the reverse button. It was again very cheap because I was not planning to hold this position overnight if it's not working. Of course, it started to work, so I kept it. But what I mean by cheap position, again, I will repeat that same thing that basically I hit the reverse button, and if we still had like 1 hour or 90 minutes before the market closed, and if at market close that position would be in a loss even by a couple of ticks, I would get out, but that's not what happened. So to give a very simple playbook, because it's really simple playbook, you execute at the pivots. Pivots are expiration prices. You scale some down at the targets, and these levels that now every quarter I will release a video with most important levels for every major asset. I call them flattened zones. So usually I would simply flatten my position, but instead of flattening this time, I hit the reverse button because too many matchups, and I was waiting for this level for more than a month. So this is what happened, but it's simple. If you need levels to execute at pivots, reduce at targets. In one of trading plan videos, I showed how to add. So you reduce a couple of ticks or points, depending on an asset. How you call it, you reduce a little bit below. If you see that it's going above, you can add again and right to the next target. So yeah, but these are the most important targets for me. And I tweeted, for example, for ES 69.83. So for example, 69.83, if we reach 69.83 in the December expiration cycle there, it will definitely be the level where I flatten everything. Again, like I repeat, I will reintroduce some of the positions if I see that this move is continuing, but these levels are literally flattened levels. We are here, I'm out, we'll see what happens. So 69.83 is the same scenario for ES, of course. First we need to go there, but hey, we had a couple of crazy quarters already, so now we know that 300 points for ES is nothing. I will just remind people that from June expirations cycle, June contract expired at 60.10 in ES. September contract expired at 66.58. I will just remind you that it's more than 10%. So now when we expect 69.83, it's quite hard to call it unrealistic. Anything can happen, and it's really realistic. But you have levels to the upside, to the downside. What happened is, yeah, literally that level of 1962 happened. That was the most important thing.
Yeah, so yeah, 1962 you can see here on the M5 up T1. So yeah, that was the target provided. So Vi released a video last weekend regarding targets based on expiration contracts. So if you trade futures, I really highly recommend you watch that video.
No. Again, I will repeat because I already told that many times, and this is where people get confused and make mistakes. If you don't trade futures, doesn't matter, and you shouldn't trade futures. Majority of people will never ever trade futures in their life. But you need to watch these levels on futures. Futures data is available. It's not something But when you see these levels, you can trade SPY, you can trade euro dollar FX, you can trade FXC, you can trade GLD, whatever you are trading. So no, this is just one thing. But when it comes to trading plan, what you will get and what you can expect is this. Every month we have monthly videos, of course, and you will get monthly targets, quarterly targets, annual targets. But every 3 months there will be another video, because once every 3 months we have major OPEX and major futures expiration cycle. So, and it happens not in the beginning or the end of the month, it happens on a third Friday. So also on third Friday of every quarter, we will have new macro levels, new macro zones. So of course, on that weekend, you can expect to have one additional video where I will just tell you, hey, for ES and QRTY, YM, 6C and others, here are the levels and you need to watch them. And please don't make that mistake to ignore them just because you don't trade futures. Yeah, that's what I wanted to
Thank
mention.
you for giving the more info, right? Okay, I'm gonna check one last time if we have more questions, but I think we should be good. Yeah, we're good.
Great. Thanks everyone. Ted got to leave already, so thank you, Ted. Great insights as always. Thanks everyone for joining. As always, manage your risk and see you in 2 weeks. Thanks, Raphael. Thanks everyone. Bye.
Thank you, bye. See you.